Marc joining us as always by phone from some far-flung locale. Marc, what do you make of these record highs we're getting in the stock market?
Well, it's what it is. The market has gone up, and we have continuous, essentially, money printing in the world, not in the U.S., but by the ECB and the Bank of England, and obviously by the Bank of Japan. So this liquidity is flowing around the world and is driving up asset prices, not just equities, but as you've seen this year, gold is up strongly, silver up 40%, gold and silver shares, most of them are up more than 100%. So this is what is happening. When you print money, something goes up. The real economy in the world is not doing well.
So I'm assuming that you are not a buyer of this rally. Just a wild assumption on my part, Marc.
I always own some shares and some bonds and some cash and some precious metals and some real estate for the simple reason that the people such as Gundlach who say, sell everything, including your children, he has his priority wrong. He should say, sell everything. First of all, your wife and not the children. But aside from that, the question is then, what do you do with the cash? You can put it in a bank, but what about if the bank goes bankrupt? And what about if the Fed and other central banks, as I believe, will continue to print money with the result that the purchasing power of money diminishes? In that case, you're probably better off by having a diversified portfolio of assets.
Put that into practical perspective then, okay? Because it sounds like you're a little bit frustrated and you're worried about things, bank failures, et cetera, Marc. I mean, listen, I think we know we've got so much backstop from the ECB, BOJ, our Fed, that those things are unlikely to happen. So what's a fair allocation of stocks for the average risk profile portfolio?
Well, everybody has to decide for himself, but say, I own emerging market bonds and equities, so that makes up for something like 40% of the portfolio. Then I have treasuries, which have been doing very well over the last 12 months and 24 months, and actually since 1981. And I also own precious metals that have done very well recently. So I think everybody has to decide for himself. There are risks. People think that maybe money is safe in the bank, but you don't get any interest. And in Europe, as you know, we have over $12 trillion worth of sovereign bonds with negative yield. So I say to myself, I can buy a 10-year U.S. Treasury at the yield of, say, 1.58% today, rather than having a negative yield on the 10-year Swiss franc bond or Japanese bond.
Yeah.
So they're not attractive as an investment treasuries at this stage, but compared to cash and other sovereign bonds,
let's go back into this idea of this 40% drop that you just talked about. Can you dive in a little bit more on that, Marc?
I think it will happen, and maybe even more. I think we can easily give back like 5 years of capital gains, which would take the market down to around 1,100.
Why? Why would that happen?
Well, you never know exactly why it will happen, but the fact is the market hasn't been really driven by buying, by genuine buying, but by stock buybacks, takeovers, and acquisitions. And the market, the leadership has been narrowing. There are not that many stocks that are making new highs. It's quite a narrow group of stocks that have been very strong. So I've seen repeatedly in my life markets drop 40, 50%. And in some cases, I've seen a market like the Dow Jones drop 21% in one day.
Okay.
So many things can happen.
Many people would agree with you. Many more probably would not. whatever that means,
Yeah,
Mark.
sure. But
And
all
that's,
I'm saying is we live in a very volatile world because of the excess liquidity that has been created by central banks, and this will lead to a lot of volatility.
so let's say that somebody's watching this and they agree with what you're saying. They own equities. They're not a professional. Maybe they've got a 401k, a 529, just a mutual funds or stocks they own. What should they do to protect themselves outside of just selling the house, selling the car, selling the kids? At the apocalypse, I think Gunlock was quoting Apocalypse Now, by the way. That's a line from that. But what should they do?
I think if you are an investor with a lot of nerves and you sleep well at night anyway, then you could hedge the portfolio somewhat by selling short some stocks that are overvalued and are likely to go down. But I think another way to hedge a
Like
stock
what? Can you give us an
portfolio-
idea? Can you give us an idea?
Well, I think Tesla is a company that is likely to go to zero eventually.
What?
Yes,
Why?
because what they produce, namely battery-driven cars, can be produced by Mercedes, BMW, Toyota, Nissan. Anybody in the world can make it eventually at much lower cost and probably more efficiently. The market for Toyota and these large automobile groups is simply not yet big enough. But the moment it becomes bigger, they'll move into the field, and then the Tesla will have a lot of competition.
Okay, so short some select stocks. Tesla is obviously one of those. What else
But as
should
I
the
said to
prudent
you,
investor
what I
do
would do
to protect himself?
as a hedge for an ordinary investor that doesn't want to have a huge exposure because these stocks like Tesla are very volatile, the better way is to have part of your money in treasuries. Because if the market really craves in, then I think that the money will move out of equities into treasuries.
A
And
lot
if
of it
you
already
own
has,
stocks-
even as equities have gone up. Bonds have also gone up.
Yes, but they're more likely to rally if there is really a crack in the market. Secondly, I would say if you are in equities, as you know, since 2011, emerging markets have grossly underperformed the U.S. But this year, many emerging markets have begun to outperform the U.S. So Brazil, in dollar terms, this year is up 65%.
Yes.
Russia, 23%. Thailand, 24%. Philippines, Indonesia, 24%. The Philippines, 22%, and so forth. So I would, if I were investing in equities, and I have a portfolio, as I told you, but I focus more on emerging market equities, on gold shares, and physical gold, platinum, and silver.
Okay, gold shares, perhaps short Tesla, could be a zero stock. Concerned about an upcoming drop. Marc Faber, we covered a lot there in a short
Yeah,
amount. We could talk with you
thank you.
forever. We'll talk with you soon again, though, sir. Thanks for joining us on Trading Nation.
Thanks, my pleasure. Bye-bye.